Good morning.
Good morning. Happy
Yes.
Monday.
Good morning.
Yes, and we have a guest.
Happy Monday.
So today, this is Talent Talk. This is where we have a little bit of with John L. Scott Talent Group. We come through, we have a little conversation about, we get to know you a little better, have a little conversation about real estate. Today, I am Jurgen Robinson, AKA Steve Jobs. And with me also, above me is...
I'm Davina Clarity. Good morning, you guys. And to my right, your left is...
It's your boy, Steve. And what's exciting today is we've got a special guest co-host right below me. Go ahead and introduce yourself.
I'm Vina Vanessa. Good morning, everybody.
How you doing?
Morning. I know. We've got a little bit of that on your video and your audio.
Oh, I don't know what's going on. I'm on full Wi-Fi right now, but
It's okay. We'll work with it. But Vina is in our Olympia office, and so you will start seeing some of our agent faces as guest hosts with us on Monday morning. So we are really looking forward, and you are number one, girl. So yay!
I gotta start. I gotta get them excited.
Yeah.
Now, when you were trying to point to Steve, I saw your hand going like this. It made me feel like walk like an Egyptian.
I didn't know which hand to use because it's kind of on the other side. So I was trying to squeeze it in, because if I went all the way out, I'd be out the screen. So there we go.
Steve needs somebody standing right next to him to extend the finger. Well, not the finger, but a finger. How about?
Yeah, there you go.
Right.
There you go. So what do we have going on today, you guys?
Well, today we got a great guest coming in talking about, we're talking about bridge loans today.
Something really pertinent for today's market, right?
Exactly. And you know what? Since we've got a special guest with Vina. Vina, do you happen to have our trivia question in front of you that you could read?
Oh,
You know what? I don't have it. Oh, right here.
Yeah.
I see it now. Yay! Time for everything.
Go ahead and read our trivia question today. Yeah.
Sure. So, according to the 2020 National Association of Realtors profile of home buyers and sellers, what percentage of home used proceeds from the sale of a home to purchase a new home? Oh,
yeah.
And here are your answers.
Go ahead and read the options.
B, 38%, C, 56%, or D, 87%. I think it's a number.
I don't see anything over 100%, so I'm stuck.
Not in this market, but
So we will see how many people use the proceeds from a sale of a home to purchase a new home. We will actually go over the answer a little bit later. So Christy has already put that question out on our Facebook land, so you guys can answer that. And wow, I know the answer to the question, but I might have been a little stumped.
Well, it's a really relative question for today's guest, because she is going to be filling us in. If you've ever had questions about, if you've ever heard the term bridge loan and wondered, why do I want to buy a bridge? It's not about that. It's about building a bridge figuratively between owning one home and being able to sell it and purchase another. And Davina, you have our introduction, right?
Absolutely. We are really thrilled to be enlightened by this professional in the banking industry. She comes to us from WAFED. She is the vice president and retail area manager for WAFED Bank. Now that means she oversees Lewis, Thurston, and Pierce County. So very wide area of management. She's been with WAFED for 15 years and in the banking industry or the lending industry for 25 years. So a breadth of experience. She's older than all of us here. I'm just kidding. Just kidding.
Fortunately, she's laughing in the back.
You're right. She's laughing back there, so that's a good thing. Yeah, I was gonna say 25 years. She's been in the business before any of us were born, right? So anyway, we have the honor of welcoming Chris Campbell.
Yay. Welcome.
I know the age jokes were because I let you in that I bought my first pair of glasses, and you just took it home, girl. Good
And I'm
morning,
wearing
everybody.
them, so yeah. Well,
I'm just glad.
Yeah, go ahead.
I was just gonna say I'm glad it's just glasses, not hearing aids, because you could hear it.
Oh gosh. Well, thank you so much, Chris, for joining us. And
Absolutely.
we're really, really happy to have you this morning.
Happy to be here.
Thank you. And we were just talking about, the common conversation we've been having is about our market being so very competitive. And, one of the things that our buyers are looking and that we're looking to do is help our buyers make more competitive offers. And so there's a thing called a home sale contingency that we can use, but those offers a lot of times are really difficult to negotiate. But there's another option, and we've been talking about this, called a bridge loan, where they don't have to go contingent on an offer. Can you tell us what is a bridge loan?
I would love to. It is one of the best tools that you can have in your arsenal. Your clients are going to love it. You're going to love it. Eliminates the contingent offer. It's when it works, when the math works, it's really, truly a great program. So the way a bridge loan works is it advances on paper the equity of the client's exit home to enable 100% financing or 100% financing and closing costs, just depending on how the numbers work out. Then the bank gets the down payment that would have been required once the exit home is sold and the buyers have their money. It also eliminates the need for the buyers to move twice, which everybody is pretty much a fan of.
Yeah.
So that's just kind of the broad strokes of the program. The WAFED program, that's the one I can speak to, obviously. It is pros and cons. Pros, buyer doesn't move twice. You don't write a contingent offer. The loan is reamortized automatically when we receive the down payment from the sale of their exit home. The qualifying for the bridge loan, the exit home is not included in the ratios. So they don't have to qualify carrying both payments, because we know the cure for the debt ratios is the pay down of the loan. So there is with us a 0.25% rate up on our interest rate during the time that we're doing the bridge financing. Once we've actually been paid down and gotten our down payment, that 0.25% falls away and we re-amortize, and your clients ride off into the sunset in their new home.
There's a lot to unpack there.
Yes,
there
a lot
is.
of terminology.
Sorry.
There is. We'll dive into that here in a second. But Chris, can you tell us a little bit difference, because there's all types of loans. So maybe the difference between that bridge loan, your traditional loan, and hard money loans?
Absolutely. So with WAFED, a bridge really is a traditional loan in that it's going to be 30-year fixed financing. So the 30-year fixed bread and butter loan that we've all know and love is exactly what our bridge product is. Hard money, it has a place in the world. Absolutely. It's a great tool when you don't have any other options. But with a bridge loan, hopefully we can eliminate the need for hard money. Hard money, as you know, are private lenders. Usually it's a fee-intensive structure and oftentimes a higher interest rate and a short-term loan. So the bridge, there is no expiration date on the bridge. If they wanted to remodel their new home, and so they wanted to, demo it or do something, they could continue to live in what I'm calling their exit home for 6 months. There's no expiration date on the bridge. In other words, you don't have to do your principal pay down by any set date. It's very flexible.
Okay.
Nice.
Man, there's a lot of questions brewing up in my head.
I know. Me too. Yeah, Vina, you've got the next one.
Sorry, my connection is bad. What was that?
If you're set, you got the next question?
Yes. So the market is very competitive and buyers are looking for ways to make more offers. Offers that are contingent on a home sale can be difficult to negotiate, but there is another option available if a buyer needs to sell their existing home to purchase. That option is called bridge loan. Oh my God, we already did that.
Yes.
Sorry.
No, it's good because we got to recap. If anyone was lost.
Oh my God.
I think we're down to the qualification. Yeah.
Qualification. Wait. Is that the second
absolutely.
one?
Yeah,
second
you're great.
one.
Mm-hmm.
Okay. How long is the process from the time application is made? And what happens if the borrower decides not to sell their home after the new home closes? The competitive market and increasing equity in home.
Oh, no.
Are you seeing?
Only one at a time, Vina. No, you got that for sure.
Let's do that. Look at that question. There's so many.
Vina, you're wonderful. So disclosure. So you guys, we have all of our questions like in our little chat area, and so before our show, we actually post our questions up so that we can kind of keep track on what questions we want to ask, and they don't have a number in front of them, and so Vina, we didn't give her the disclosure that the question didn't have a number in front of it. So she's reading. Bless your heart, girl. We love you. So Vina,
no, this is fun. Now
you're among friends, Vina.
What I want to know is, I want to see Chris answer each of those just like you read it, though.
No. Yeah, no one
is like, there's so many replay button.
For a long time. When do I stop?
Vina, that's the whole point. You don't stop.
Right. Vina, it's the question about qualification. So on the first paragraph, the last one before the question mark.
Yeah. And it's a really good question.
I think I got it. Are you ready?
Absolutely.
Go ahead.
How does someone qualify a bridge loan? Is that it?
Yeah.
Oh my God, I got it!
Yay!
Third try.
Well, in answer to your question, hopefully, very easily. Again, with WAFED, the exit home or your borrower's current home is not included in your client's debt ratios. We're only looking at the purchase of the new home for qualifying purposes. If they have high ratios going in, that's okay, because we know the principal pay down that WAFED's going to receive when their exit home sells and they actually receive their proceeds is going to be the cure for the high ratios. So we're still looking for maybe a traditional 43% back end, but if going into it, we're at a 65, we exclude, again, their current home payment, and we live with that 65, provided that when they get the principal reduction to us, their ratios fall below that 43. And of course, they almost always do.
Nice. And before asking, because there's something I wanted to build on a question there before asking the next one, which is, What about so that is kind of the debt to income ratios you were talking about with the
Mhm.
43. What about like credit scores or any other qualifiers that a traditional mortgage, since you mentioned it's really kind of a 30-year product,
Mhm.
do you still qualify in credit score and other things in the same way, or is there, since this is on a home with equity, is it a little different?
No, it's absolutely no different than how we would underwrite a 30-year fixed, except for the bridge calculation itself. So we're looking for the same credit scores, the same, history of income that we would if it was a contingent offer. There's absolutely no underwriting difference from one to the other.
Okay, and I'm gonna. How does this impact? Since this is something that they're going to use to help purchase another home, does this impact their credit score in any way towards the purchase of the new home, or like an inquiry or anything?
There will be an inquiry, so it would be really no different though than when they're doing their mortgage shopping if they had contingent financing, right? So even if they were going to write a contingent offer, they'd hopefully go out and get pre-qualified with a lender before having you guys show them a bunch of houses. So it would be the same inquiry that they would have whether they're doing the bridge financing or traditional mortgage shopping with a contingent offer.
Great, Davina.
Yeah, so we talked about the person. Now, what about the actual property? So if they're living in a home and they obviously have to have some equity, right, in order to pull out, how does the exit property qualify?
So for us, we need the properties to be like. So, and what I mean by like is owner occupied to owner occupied, rental to rental. So we wouldn't cross an owner occupied with a rental. So occupancy needs to basically be a mirror. It does need to be located in the same state.
Oh.
If it not, so we can't cross state lines because different states have different foreclosure laws. So it's going to be captured on one deed of trust, and that's
Okay.
why the properties do need to be located in the same state. We can do different counties, and that deed will be recorded in each county where a property is located. So again, the property types for occupancy needs to be a mirror, and the properties need to be located in the same state because there will be one deed of trust.
And then what about the equity position of that property? Is there a certain minimum they have to have?
I actually sent Christy a snapshot of a bridge calculation. I don't know if there's a way that we can display that, and then we can talk through the example.
Yep.
We'll get that. I think we're working on it. We can get that up
Okay.
and just come back to that. But before that, what's the time frame, or how long is a process from the time the application is made?
Mm-hmm. The same as any mortgage. It's really just going to be the same. It doesn't add any time. Everything happens concurrently. So right now in my area, Thurston, Lewis, Pierce appraisals are running a little bit slow. So I would probably say 45 to 60 days in my marketplace. And again, that would be for us doing a purchase, whether it's a cross collateral or not. It really shouldn't add any time.
So should you start that bridge loan process prior to looking for your next home, or should you wait until you identify the property that you want to purchase before starting this process?
Either. I always recommend to my clients to get their credit approval first, because then we only have to vet the property at the end. So I am a big fan of starting early, knowing what you qualify for. I ask my clients when we're talking about hypotheticals that give me the highest number home that you might go out and purchase. And if we can make your scenario work with what I'm going to call the worst case numbers, then when you don't spend all that money, it's all good and it's gravy in the end. So I do say start early, be prepared, and use the worst case numbers.
Awesome. Vina, you got the next one?
Oh, there's our calculation.
So hold that. Okay, what are we looking at?
So this is a sample worksheet that I worked up for today's meeting.
Great.
And I'm just going to walk you through the steps. This is literally how we do our calculation in-house for an owner-occupied residence. the top loan, the top line is our proposed purchase price. So if somebody has a home they're looking at and it's 500,000, I plug that in the top. The second line is the value of what I call their exit home. I see you, Steve Jobs, peek. So I'm going to say their exit home is worth 375. So this is going to be a step up property. So we add the value of the two collateral together. And in this case, it's going to give us 875. Normally, WAFED, we always strive for an 80% loan to value. Whenever we do a bridge, we're going to reduce the LTV by 5% just to make room for, on the exit home, realtors' fees, closing costs, any repairs that they need to make that might be withheld from their proceeds. So we're going to take the total collateral of 875 times a 75% loan to value, and that gives us a potential loan of 656 250. Of that potential loan, 150,000 is already spoken for by the exit home's first mortgage holder. So we'll subtract that from our potential loan. So again, that 150 that you see is what they owe on their exit. So subtract my 656 250 from what is owed gives me a potential loan amount of 506 250. So in this scenario, we could literally finance 100% of the client's purchase price and the first 6,250 of their closing costs, meaning the cash to close for the borrower would be minimal.
That was really helpful.
Yeah, and so that's in the instance if they have a home that's worth 375 and they have a mortgage balance of 150,000. So obviously, whatever they owe on that property does affect the amount that they can bridge into the next property, and they may have to either have a lower price depending on if they owe more, right? As I'm reading this, right?
Yes.
Okay, gotcha. Okay.
And it's not all or nothing. So in that scenario, it worked out that we could do 100% financing plus some closing costs. You know, maybe it works out that we'll do 95%. You might be asking, well, I can get 95% conventional. Why would I care about doing the bridge at that point? So I'm going to speak to that really quickly if we've got the time.
Sure.
The reason that the bridge still might be a great option over traditional 95% financing would be no mortgage insurance. The interest rate would basically be based at the 80%. We're going to do the reamortization automatically. So your client gets the benefit of having an 80% interest rate with no MI, with an amortization built in. So they won't be stuck with the interest rate and PMI of that potential high LTV loan at the marketplace.
Okay.
Wow.
Davina, the wheels are turning. I can see it.
They really are turning. And there's so many. I mean, we could like go a whole hour on here. Like for real.
It really is a very neat product. The clients love it. Again, not having to move twice. It's brilliant.
Yeah, totally.
And Vina, you have one more here?
I think I've asked this question before. Hopefully I'm correct this time.
You may have, because you asked all the questions earlier.
How long is the process from the time applicant is made? Is that
Next
the right
one,
question? Yay! Okay.
It's the next one would actually be what happens if they don't sell their home.
What happens if the borrower decides not to sell their home after their new home closes? Ooh.
Nothing.
Okay.
There's no monster under the bed. There's no boogeyman. There's no expiration date. What happens if they don't sell it is they're going to be carrying 2 really large payments. So hopefully if they elect to not sell, they'll at least get some renters in their exit home so they can live comfortably. But on our side, absolutely nothing happens. We continue to have an interest in both properties during the time, right, that we're carrying the bridge loan. But it could go on for years. So if the market suddenly softened and you had some clients say, well, I don't want to sell right now. I think if I hang on to it for another year, it's going to appreciate. Great. Hold on to it. Hopefully rent it so you have some income coming in, but absolutely nothing happens. They'll just continue to pay a 0.25% higher interest rate, and their payments will be based on what we're carrying, which is likely a high LTV loan.
Yeah.
Mm.
You know, when we look at this, the popularity of any loan can kind of, wane or become more popular depending upon market conditions. And it would certainly seem that a bridge loan, based on what you're talking about, would have increased interest at a time where it's a strong seller's market, probably less so when it's not.
Correct.
Is that what's been going on, or how has that been performing during this time for you, as it's become such a weighted seller's market during this time?
You're spot on. I would say probably 35 to maybe 40% of everything I'm doing right now is a cross collateral bridge loan. We can also do them for
What was that
custom,
percentage?
like 40.
Oh my gosh.
Wow. That's go ahead. Yeah. That's remarkable.
It's not just with purchases. You know, I also have some people that want to build their new home because they're not able to find something on the market that they like, or they don't want to get in a bidding war. So we're also seeing a lot of construction bridge loans, which is part of the 40%. So it's a real popular program right now. Obviously, there's a calculation from an equity standpoint that has to happen, but when the math works, it's pretty neat.
That's brilliant. It doesn't seem like it's talked about as much as maybe it should be.
Yeah, I don't believe there's a lot of lenders that are offering it, but we're one of them. So WAFED is all over the West Coast except in California. So John L. Scott agents, go to the WAFED near you.
I love it.
That's it. Within that
I'm on
same
my way. I'll be right back.
Okay,
right,
come on.
Within that same question, Chris, COVID. So and you mentioned, a lot of lenders aren't offering this program, and a lot of lenders have been, we've seen programs get, just reduced or eliminated because of COVID specifically. Can you speak to that a little bit, just in regards to what you've seen within your organization as far as programs that you've carried? I mean, did you have any effect with COVID with the availability of any programs?
No. So WAFED is 100% portfolio. We sell nothing on the secondary market. Every loan we make, we keep. So COVID, other than having us close our lobbies down and being by appointment only, our programs are our programs that we had pre-COVID. We're going to have them post-COVID. And we're going to have them for the next 100 years.
Okay.
So no
And
change
100
for us.
after that.
That's right. It's business as usual over here.
Hey, good morning, Penny.
Good
Good
morning.
morning.
We've probably reached the end spot with Chris here. I think you've probably got the last question. And Chris, this has actually been a great conversation. I actually learned while we were talking here quite a bit. So
Good. I'm happy to hear that.
Chris, if we wanted to get in contact with you at WAFED, what's your contact information? What's the best way to get a hold of you?
Email is best because I do rove from office to office. So calling me could be frustrating. You'd be like chasing me. But email, I can go ahead and share that with you.
Please.
You ready?
Yeah.
It's first name dot last name. So Chris, CHRIS, dot Campbell, like Campbell Soup, CAMPBELL, at WAFD.com. Like WAFED, but with no E.
With no E.com. Okay.
It happens to be our ticker symbol on NASDAQ. Shameless plug.
I didn't know you guys were publicly traded.
We are.
Wow.
Portfolio and publicly traded. What's better?
I don't know. Can you tell me?
No, we're the best.
Okay.
Oh man. Well, Chris, thank you so much for
You're very welcome.
and you know what, I'm going to be calling you because I want to get more information. I feel like we just scratched the surface. We can go so far, and I think we're going to want to have you on to actually talk to our group. So we'll hook up and chat a little bit more about the bridge loan options. So
I'm happy to help. Just give me a shout.
And Miss Shingledecker, Cindy says, thank you so much, Chris. I learned more in these few minutes. Thank you. That's awesome.
Thank you, Cindy. You're very welcome.
Yeah.
All right, guys, make it a great week.
Okay.
All right, you as well. Thank you so much.
All right. Bye, Chris.
Bye-bye.
Bye.
You know, also, if out there, it actually has quite a few eyeballs. If anybody has some questions, hey, Donna, we would love to toss it with us. Give us your questions, and we would love to have her back. I mean, if you have some more specific ones about bridge loans or maybe even some of the loan products, we'd love to give you different voices because everybody does something a little bit different, and there's a real good reason why, because everybody has a different scenario. So by having options, you're always going to be in a better position.
You know, Chris was talking about WAFed, and she's doing about 30 to 40% of her business has been the bridge loans. And I know every time we talk about bridge loans, I hear WAFed come up, which is great. You know, to know that we've got that resource there. But just in general, I don't know if I'm seeing that many bridge loans. I don't know. I think it's almost like an underutilized product that.
I don't know that a lot of lenders do it is the thing. You pitch what you got, right?
Yeah.
So if it wasn't Chris is about the only person I think right now, I believe, if she said, I have a bridge to sell you, that I'd be, okay, I'll listen.
Yeah. Yeah. So it's good to know.
Yeah. And then that actually brings us back to our trivia question, right?
Yo, yes. And do we have our trivia gal?
Oh.
Or no? Okay. Well, Vina, do you want to take our trivia question and give us the answer?
Do you want me to read it again? I thought I did this already.
Normally, Christy pops in too. Where's Christy too?
Our trivia question. According to the 2020 National, Christy can do it. Come on, Christy.
All right, I got it, Vina. I'll take it from here.
Yeah. You know, the whole thing is Vina had no idea we were going to ask her to read so much.
She's like, I was definitely not ready for that. All right. I got it from here, Vina. All right. So today's trivia question, according to the 2020 National Association of Realtors profile of home buyers and sellers, what percentage of home buyers used proceeds from the sale of their home to purchase a new home? Was it A, 20%, B, 38%, C, 56%, or D, 87%? So I am looking at the back answers, and most people chose B, 38%. So you guys ready to find out if they're right?
Yeah.
I didn't flash the answer like 2 seconds ago by mistake. All right, so the answer is B. 38% of buyers cited using the proceeds from the sale of a primary residence to purchase a new home.
Yeah.
Wow.
Does that sound accurate to you guys?
Yeah, I guess, I think it is definitely, because when you look at contingent buyers are having a really hard time in the market, and that probably is pretty accurate. I mean, obviously these are national numbers, but yeah, a lot of people have to sell a house to move into a new one.
Yeah, and sometimes we don't see, they don't go as a pending contract or a contingent offer because right now some buyers are actually selling their home before they even go on the market, because it's so competitive. And that's where this bridge loan could really come in handy, because it is really difficult to, like when she was talking about doing 2 moves, sometimes it can be really tough to sell your home if you can't get a rent back, have to move out somewhere temporarily before you can move into your new home.
Yeah. So they're taking those proceeds, putting them in the bank, finding a house, and using them as down payment or cash to purchase, depending on how much they realize from that exit property. So
Penny jumped in a little later. So she wanted to know, I jumped in late on the call. Can you please give me the definition of a bridge loan?
An eloquent definition?
A definition with words.
Right.
It's a way of being able to use the proceeds, the equity of one home. And this is the really simplified version. Chris's version is so much better and better detailed. But the proceeds, equity position in one home to purchase another home without having to sell the other home, the first home, or what she was calling the exit home. So it's getting essentially like a second mortgage. I didn't even realize it was really a second mortgage product. I thought I was thinking about it much more like a hard money loan, like a short-term loan that helped you just bridge that gap. So that was a new definition for me.
Yeah, it's actually you finance both properties in one loan until you move out of that first property, and then they then adjust your balance and re-amortize. Yeah, so it's definitely an option, a good option, and I would say reach out to Chris for more information and to just basically figure out if this is the right loan program for you if you own a home already.
Yeah, and Penny, you've got the right idea. Yeah. Rewatch that for Chris's definition because she's got it dialed in. Go back to the experts. That's what we try to bring in, are the experts.
Yes.
We'll definitely have to get Chris back in, even within our meeting with our brokers, to kind of go through the bridge loan, because I think it's a great resource and a tool to have in your tool belt, is what you said. So,
Well, Steve, we are getting ready to wrap up, and before we get there, we've got a couple of updates that you've got for us, right?
Yes, I do. So we've got a few things coming up this week, just to kind of keep you guys in the loop out there. So for our John L. Scott brokers this week, we have our Wednesday business meeting at 9 a.m. For those of you attending, we will have Zing Fix, which is going to be talking about our program of like our Repair Your Home program before you put it on the market, Market Ready program. John L. Scott Market Ready. Get your home fixed and repaired before it hits the market. If you have problems with financing, we can actually help you out with that. So for our brokers, tune in. If you're a seller, this is a great program that we're offering to you guys right now for our consumers. For our brokers in the John L. Scott, and actually brokers out there in general, we also have a Forms Friday class going at 9 a.m. Tune into that. You can go to our webpage or our Facebook page and register. We also have Facebook Friday, where we bring in a person within our the real estate industry to come in and talk about pertinent topics that affect us in our business. We also have Jumpstart training that starts this Tuesday. So if you're looking or thinking about getting a real estate license, wanting to know what a career in real estate looks like, we have what we call our Jumpstart class, which lasts for the next 3 weeks. It's every Tuesday from 5:30 to 6:30. So go to our Facebook webpage or our webpage, and you can find all the information there to register for that hour-long class. And I think that is it. That's what we got coming up.
The very last thing we've got is on Friday at 8:30. We have our talent market update, bringing you the most current information and insights in what's going on in the real estate market, hosted by yours truly and Miss Davina to my left. Yes, or your right, whichever way it is.
It's okay. You're the right direction. So
yeah.
And yes,
and Jumpstart is virtual.
Yes.
And Vina, it was fun. I know this is a whole new experience for us to have a guest host in. Have you at least had fun yourself?
Oh, yes, I did. Embarrassing myself in front of everybody. Hey, real.
If we're gonna like do something bold and exciting and potentially a little embarrassing, why not do it in front of the world?
Exactly. I loved it. Thank you, guys.
You're awesome. And a couple of shout outs. Shannon Kimino, it's her anniversary, work anniversary today. And Susie Williams, tomorrow is her birthday on the 9th. And Clarissa Clarissa McCollian's birthday is on the 11th this week. So just wanted to give a few shout outs for some birthdays and anniversaries.
And this is Clarissa's birthday month as well. So
yeah, exactly. I saw she started celebrating already. She's hitting it hard this year. So
Christy, that's to say she doesn't celebrate the birthday month every year.
Yeah.
And Donna says, you did great, Vina.
Thank you, Miss Donna. Thank you.
All right. Well, I guess it's time how we end it. You know how we end our broadcasts every week. It's how we end our business meetings. It's kind of how we just proclaim to the world about how important it is to be outside of our comfort zones. Good job, Vina. This was totally outside your comfort zone today, wasn't it?
For sure. Next time I'll be better. There's next time.
I like you said
love the fact there's next time.
it gets easier. It gets easier.
Right?
Yes.
I think so.
Totally. So,
Well, when Christy was, I was going to say the first time Christy was on, she wouldn't even get out from under her desk. Like it was just a disembodied voice.
Every time they're like, Christy, come out from the back. I was like, oh no.
Yeah.
Oh gosh. So we normally count down or count up to 3 and then we do our Be Bold. So Vina, do you want to take us out today on a Be Bold?
Sure.
So count us down.
Ready? 3, 2, 1. Be bold.
All right.
You got it.
Yay.
Have a great day, you guys.
Great Monday, great week.